Conference call, you said, we have not seen signs of demand softening. It's early in the year. We've got a lot of cross currents. Do you expect that to remain the case for the remainder of the year?
Good morning, David. We think so. The forward booking data looks terrific. And I think what's most encouraging to us is we're seeing strong recovery across all three demand segments. If you look at the quarter, leisure demand was up 7%. Group was a particular highlight, up 10%, and business transient was 90% recovered, and for small and medium-sized businesses, actually up 6%. But I want to go back to group for a minute because it goes to your point. When we look at the forward group bookings for 2023, we're actually tracking about 20% ahead of where we were a year ago.
Interesting. Now, business travel, something that we talked about endlessly during the heart of the pandemic and whether or not it would ever come back to what it was in 2019. Where does it stand right now in terms of the recovery? And again, what are your expectations when it comes to the remainder of this year?
So in the U.S. and Canada, our biggest market, we're 90% recovered to where we were pre-pandemic. But if you go a level deeper, small and medium-sized businesses, which represent about 60% of our total universe of business transient demand, are actually 6% ahead of where we were in 2019. It's the larger companies that have recovered more slowly than we would like. But even there, we have a subset called special corporate, which are pre-negotiated rates with large employers. And we actually rolled over their rates for 2 years. As we came into 2023, we did re-enter into negotiations, and we've been able to negotiate rates increased in the high single digits, which I think bodes well for business travel going into 23.
Yeah, do you ever think it's going to get back to pre-pandemic levels?
I hope so. What I've said previously, and I really believe this, and I think the data bears it out, I don't for a moment believe overall travel is permanently impaired, but I think it's going to look a little different. One of the things we talked about on the call this morning, what we've historically thought of as shoulder days, Thursday and Sunday, have actually recovered more quickly, which I think is evidence of this idea of blended trip purpose. And interestingly, if you look at business trips that we accommodated in 2022, they were 20% longer in duration. So we have more and more guests tacking on a couple days of leisure pre or post business trip. And so while the mix might look a little different, I think travel will continue to recover in a really compelling way.
Tony, you highlighted the digital growth and the usage of your mobile app and essentially what percentage of your business is now kind of attributable to some of that. What does that mean longer term for the relationship with the booking networks, the availability of inventory there? Is there a kind of a push-pull on that front?
Not necessarily. I mean, I think what we learned, particularly in the pandemic, the travel intermediaries, the OTAs, they are a valuable partner for us. They allow us to access guests that we might not access on our own. But what we saw over the last couple of years, while the OTAs grew, our share of proprietary channels is growing more rapidly. And those are obviously very efficient, very cost-effective channels for our owner community.
Tony, labor availability, how would you rate it relative to the worst of coming out of COVID?
Meaningfully better. We are, in terms of available job openings in the U.S. and Canada, we're actually below where we were in 2019. Last year, the company hired 190,000 new Marriott associates, and so we're really encouraged about the career opportunities we can offer our associates and how that's manifesting itself in terms of our ability to staff up.
Tony, in his State of the Union address, the president actually spent a little time talking about cracking down on junk fees at resorts, at hotels, airlines. How, if in any way, is that going to impact your business? What were your reaction? What was your reaction to when you heard it within the corporation?
Well, we, like many Americans, listened closely to every comment during the State of the Union. My takeaway is what the president was really focused on was, quote, hidden fees. And when you look at the manner in which we disclose resort and destination fees, number one. Number two, when you look at the value proposition that we require our hotels to offer in exchange for charging one of those fees. And three, when we remind ourselves that with a global portfolio of 8,300 hotels, less than 300 have those fees, we think we're in a pretty good position relative to the comments from the president.